Behind, can you all see the screen? Joanne, no? Check. No? Come in front, please, one of you. Here, this place. Here. Huh? These people are gone out. Can you all see now? What you said? Little more. Still more. It's okay. Right. Bombay Trading Company purchased on 1st January 2005 a machine on installment basis. Okay, so we are doing the installment method here. How do you know the difference whether you have to solve under hire purchase or installment basis? They will tell you that it's bought on installment or they'll tell you it's bought on hire purchase. That's the only difference. Okay. The cash price of the machine was rupees 15,450. Payment was to be made as under. On 1st January 2005, on signing the contract, rupees 3,000. So they bought the machine on installment basis on 1st January 2005. There's also a down payment on the same date. Then the first installment comes on 31st December 2005, 7,500. 31st December 2006, 4,500. 31st December 2007, 3,000. Bombay Trading charged depreciation at 10% per annum under diminishing balance method. You are required to prepare accounts in the books of Bombay Trading. Who's the purchaser here, the buyer? Bombay Trading. Okay, they have not told us from whom they bought it. So we'll just call him a seller or a vendor. That's fine. Now, before we go to the entries, we need to figure out this, the analysis of payment. Okay. Can you tell me what's missing in the problem? Can you tell me what's missing in the problem? There's something important that's missing. Huh? The rate of interest is missing. Okay, the rate of interest is missing. So how are we going to calculate? I've done this before. That's what I said. It's the same for hire purchase, installment. Only the entries are different. How I'm going to calculate this interest? We know the interest. We don't know the rate. How are we going to calculate the interest? Do you know the cash price? Do you know the cash price? Yes. Besides the cash price, what else do you know? You know the down payment. What else do you know? You know all the installments that are going to be paid. So what will that give you? Yeah, we don't say higher purchase price. We're going to just say purchase price because we are following the installment system. So these four amounts are going to basically give you the purchase price. Okay, so we know the cash price. Cash price is equal to 15,450. 15,450. We also know the, I'm not going to call it the higher purchase. I'll just say purchase price since we are following the installment method. How will I get the purchase price? Put all these four together. So it's going to be 7,500 plus 3,000. So I think 12 plus 6, 17,000. Yes or no? 12, sorry, 12 plus 6 is 18,000. 18,000. How did I get 18,000? 3 plus 7 plus 7, 5 plus 4, 5 plus 3. Okay, you can check it on your calculator. So what will be the interest? Interest is equal to 18,000 minus 15,450. How much will that be? Anyone has a figure? I don't have the figures with me. How much? 2,000? 2,550. Is this the amount? No. Now we know the total interest. What are we going to do this? We need to know year-wise interest to pass our entries. Remember this method? What do we have to do? What do we have to do? This was problem 9 and 10. What we have to do? How do we divide this interest? Yes, in the ratio of the cash price of the purchase price outstanding at the beginning of each year. Okay, so we start with the purchase price. We start with the purchase price, which is Purchase price is 18,000. From this, what do we minus first? The down payment. Good. The down payment on 1st January 2005. That was when the down payment was made. Just check if these people are fine. Any questions here? So the down payment was how much? Down payment is 3,000. We are talking about interest to be divided in the ratio of purchase price outstanding at the beginning of each year. So this will be outstanding on 1st January 2005. Okay, so how much you get outstanding? 3,000, 18,000 minus 3,000 will be 15,000. Less when are we paying the first installment? Less installment on the first installment is paid on 31st December 2005, which is 7,500. So what have we done? We have purchased it on 1st January 2005. We have minus the down payments. On that day, at the beginning of that year, you still owe 15,000 more. That's the interpretation of it. Okay. Then in that year, you pay towards the end of the year, you pay 7,500. So outstanding at the beginning of the next year on 1st January 2006, 7,500. Move to the next one. Less installment on 31st December 2006 is 4,500. We call this outstanding on 1st January 2000. Now, if you see this, look, the last one we have not minus. We don't need to minus. Even if you minus, you'll get 0. We just need outstanding at the beginning of those 3 years. So you don't have to. If you want, you can minus. You'll get it as nil. Okay. If you say less installment on 31st December 2007, you minus 3,000, you get it as nil. We don't need to do that because we are just concerned with this to calculate the interest. Okay, I'm just going to write that statement here. If you want, you can write it with me. Interest, or you can write it below also. Interest is to be divided in the ratio of the outstanding purchase price at the beginning of each year. Okay. Now, how will we calculate this ratio? How are we going to? Which are the amounts that we are going to take here? 15,000, then 7,500 and 3,000. So it's going to be 15,000 is to 7,500 is to 3,000. I think you can divide it by 3. It will be 3 5s are 15. Let's see if you get 5, 3 5s are 15, 3 1s are 3. Sorry, no, it's not by 3, it's by 5. 5 3s are 15. It's easier with 5 1s are 5, 5 5s are 25, 5 6 are 30. Still, we can divide this further. I think by 15, 15 15 ones are 15 fours are 60. Then by 5 10 it's a 40. Anyone has got it up? 10 is to 5 is to 2. This will okay. 10 is to 5 is to 2. It's basically divisible by 4, I think. 4 tens are 40. 4 fives are 20. And 4 twos are 8. This is the ratio. You have to keep bringing it down. Now this cannot be divided further. You can't divide this. So keep bringing it down. Okay. Find the earliest number that you can divide all the figures with. So this is what we actually want. This is going to be our ratio. People online, any questions? Any questions? If you have any questions, please type in the questions. I will answer it as and when I see it. Okay. So now we have got so the interest. How we are going to divide the interest? What's the total interest? 2550. 2550 into 10 by 17. Check how much you get. How much? I can't hear. 1,500. 1,500. Then you have 2550 divided by 5 by 17. How much is that? How much? 750. And then we have 2 divided by 17 comes to 0. Is that clear? So whenever you see, now if there was the rate of interest was given in this problem, if the rate of interest, they could have said the rate of interest is 10%. It would have been just simple. You would have written the installment here, calculate the interest on the opening balance here, and then get that cash back. Why we have to do this extra thing is because the rate of interest is not given to us. Okay, so just try to understand or look at the problems from that angle, because then you'll know which method you need to use. So the method doesn't change for installment and hire purchase. It's only the entries that change. Okay. So let's start doing this now. So it's purchased on 1st January 2005. If possible, just rule and bring, okay, as the problems come up so that we don't waste time ruling. 1st January 2005. Opening balances, always with the cash price, always with the cash price. Please never forget this. Though we have the higher purchase price as well, the purchase price as well, it's always with the cash price. 15250. That's it, right? Sorry, 15450. 15450. These installments that are given to us, which column will they come? They can either come here or they can come here. It's obvious in this problem. Where will it come? In the installment column. Okay. Only when does it come here? When they say installment with interest, plus interest, or things like that. Okay. Now, first we have the down payment, which is 3000. There's no interest on down payment. Installment also becomes 3000. So this becomes 1245. I told you you can calculate depreciation here, you can do it in the statement. So you save time here actually if you it's easier to do it in the statement, especially when it's diminishing balance. Because you get the ready-made balance at the end of each year. So bring down the balance on 31st December 2005 because why we are saying 31st December because that's when the next one is paid. 12450. This is now the first installment which is 7500. 7500. Next, do we have to calculate the interest or we already know the interest? We already know the interest. We have already done it. So the first interest is how much? 1500. So this becomes 6000. This will become 6450. Next, 31st December 2006. Bring down the balance. Second installment is 4500. We already know the interest. Interest is 750. This will become, I think, 3750. 4500 minus 750, 3750. So 6450 minus 3750 is how much? 2700. So we bring down 2700. The last installment, as they told us, is 3000. We've already calculated here. It will automatically balance. Okay, it will automatically balance 300. And that's how you when you know also that you're correct. So this is 3000 minus 300 will be 2700. This becomes so we have 15450, 2250 and 18,000. Any questions here? Can we start with the ledgers? So they've asked us in the books of Bombay Trading, past the entries in the books of Bombay Trading. Since he's the buyer, which will be the first account? The asset account. Sorry. Okay. Which will be the first account? Machine account. It will be the machine account. Okay, machine account. Then we have the, now here we don't have a name for the vendor or the seller. They have not said from whom they purchased. So we'll just say vendor's account, or you can say seller's account. Not the higher vendor, but just the vendor's account. After that, what will we have? Which are interest. Please don't forget this. We are doing the installment method. So we have the interest suspense account. And the last is the interest account. Okay. Let's start quickly posting the entries. What's the first entry? Recording the purchase. Okay, we have to take interest suspense now into consideration. What's the entry? Asset account debit. What else is debited? Interest suspense account debited to vendor. So it will be machine account debit, interest suspense account debit to vendor. Okay. Now, though we are not passing the entries, you still need to know the amount. So we are saying in machine account, we are saying machine account debit, interest suspense account debit to vendor. So here it will be by vendor. 1st January 2005 by vendor. If you all want, you can write the entries somewhere in your margins or something, just so that the posting becomes easier. Always by the cash price here. Always by the cash price. So how much is the cash price? 15,450. 15,450. Okay. So what's the entry? Machine account debit, interest suspense account debit to vendor. So in vendor's account, it will be, sorry, I did. It's the other way around. Huh? Machine account debit, sorry. It's to vendor. Machine account debit to vendor. To vendor. Then in vendor's account, it will be buy. Buy machine and buy interest suspense. Buy machine, buy interest suspense account. Entry is machine account debit, interest suspense account debit to vendor. So we still need to post it also in interest suspense account. Machine account debit, interest suspense account debit to vendor. So in interest suspense account, it will be to vendor. To vendor. The amount of interest. Okay. Next is, what's the next entry for? Down payment, payment of the making the down payment. So that's a simple entry. It's vendor's account to bank. To bank. Down payment is 3,000. Okay. Next is recording the interest. Now we start with the sequence at the end of the year. So what's the first entry? We are in the books of the purchaser. Interest is an expense. So debit the interest, but what will be credited? Interest suspense account. So interest account debit to interest suspense. So in interest suspense account, now we are at the end of the year, by interest. And that will be the first year's interest, which is 1,500. Similarly, in interest suspense account, you will say, sorry, in interest account, you will say to interest suspense account, 1,000. Then what's the next one for? What's the next one for? For the installment. So what will it be? Vendor's account debit to bank. So on 31st December 2005 to bank, how much is the, I think it's 7,500. Yeah, 7,500. You'll have the last lecture. After the down payment, what's the next thing? Huh? What else is there? Depreciation. There's depreciation. There was no depreciation. We would have directly gone to the closing. There's depreciation. So charge the depreciation. So on 31st December 2005, by depreciation rate is, I think, 10%. So it's going to be 1,545. 1,545. And the last one is transferring the interest to P&L account, and that becomes the closing. So we start with the interest account, 31st December 2005, by P&L account, 1,500. Go to the interest suspense. I told you interest suspense, you're going to have a balance every year till the interest comes to 0. So 31st December 2005, by balance carry down, 2,550. 2,550 minus 15, can anyone tell me? 1,050. Bring down the balance so that you don't forget it. 1st January 2006 to balance brought down, 1,050. Okay. Next, close the vendor's account. So here you have a total of, this will be 18. To balance carry down, I think it's 9,500. Sorry, not 950. It is 10,000. How much is it? 7,500. Bring down the balance. Close the asset account as well. Anyone has a figure here? Anyone has this figure? How much? 18. Sorry, how much? 13. 13. 90. Bring down the balance. 13,905. 13,905. Now we move to the second year where we start only with the interest. So the entry will be interest account debit to interest suspense account. So in interest suspense we'll have by interest. By interest. Interest of the second year is 750. So interest to debit to interest suspense account. So in the interest account again. In hire purchase under the other system, what is the entry here? It's interest account debit to interest suspense account. There, what is it? Interest account debit to hire vendors account. Pay the next is pay after the interest payment of the installment. So on 31st December 2006 to bank installment. How much is the second installment? 4,500. 4,500. The installment just affects the vendor's account only. Okay, we are not opening a bank account. Next is after that, after the installment we'll have, after the installment we'll have, are you just blindly copying or you're thinking what you're doing? After the installment we'll have depreciation, yes. So on 31st December, now depreciation will be on which amount? We are following the diminishing balance method. So it's going to be 13905 into 10%. So it will be 1390.5. So it's going to be 1391. Round it up. 1390.5 will become 1391. Okay. And then go and close. Start with the interest account. Transfer the interest to profit and loss account. $750 by P&L account. There'll be a balance carried down here. Check the total 1050. It has to be the balance that's remaining. One zero five zero minus 750 here will be. Bring down the balance so that you don't forget it. Close the higher vendors account. December 2006, Wilton. You have lots of stories to tell. 7,500. This becomes 3,000. Bring down the balance. And close the asset account. $13,905. 13,905. What's the balance carried down? How much? 12,000. 5. 1. 4. Bring down the balance. 1st January 2007. 2. Balance brought down. 12,514. So now we move to the last year. Start with the interest again. Interest account debit to interest suspense account. So in interest suspense, you're going to have buy interest. 31st December 2007, buy interest. And if you see, the interest is the last interest that you have to pay, and it will close. So if you say buy interest here, you will have it as 31st December 2007. To interest suspense. So interest account debit to interest suspense account. After the interest comes the installment. Show the installment. 31st December 2007 to bank installment, which is 3,000. So this also closes. This also balances. Go and chart the depreciation. How much will be the depreciation here? What happened, Prachi? Any problem? Any problem? What will be the depreciation here? 12514 into 10% will be 1251.4, which will be 1251. 1251. So that's it. That's the last year. So we just have to close. So interest account closes by transferring it to the profit and loss account. 300. Interest suspense account is already closed. It's tallying. This is also tallying. Vendor's account will also tally. Only you'll have a balance in the asset account. So the total is 12514, 12514. What's the balance carried out? 11,268. 3. 26.